The world held its breath on April 7, 2026. A two-week ceasefire effectively paused a conflict that many feared would become a global meltdown, and the markets didn't just react, they exploded. While the headlines focus on the Dow's 1,300-point jump, the real story is in the tech sector. This was a massive buy signal for growth stocks that had been nearly left for dead, and today we are breaking down why this diplomatic truce is fundamentally rewiring the tech market. The reaction was instantaneous. This wasn't just a minor correction, it was an explosion of pent-up capital. The Dow Jones Industrial Average didn't just climb, it rocketed up over 1,300 points in a single session. While the evening news is focused on the diplomatic handshake and $5 a gallon gas in hubs like Boston, the more profound story is buried in the Nasdaq. For the tech sector, a domain that thrives on certainty, this ceasefire wasn't just a news headline, it was a fundamental market reset. Before we dive into the data, welcome back to Stocks with Hank. If you want to stay ahead of these macroeconomic shifts and see how they impact your portfolio in real time, make sure you hit that subscribe button and turn on the bell. We are tracking this ceasefire hour by hour to see if the tech rally has legs or if it's a trap. I will break this down into 5 easy parts to follow. Let's dive in. Part 1. The Macro Reset. To understand why tech is the biggest winner here, you have to look at the oil transmission mechanism. In the weeks leading up to the truce, the market was paralyzed by the threat to the Strait of Hormuz. For a tech-heavy economy, expensive energy is a double-edged sword. It raises the cost of operating massive data centers, and more importantly, it fuels the fire of inflation. High inflation is the natural enemy of technology. When the CPI stays elevated, the Federal Reserve is forced to keep interest rates high, which destroys the future valuation of growth stocks. The moment the ceasefire was announced, that inflation tax began to evaporate. Crude oil prices plummeted, and with them the expectation of runaway inflation. This created a macro reset. By removing the threat of a sustained energy shock, the ceasefire effectively cleared the path for the Fed to reconsider rate cuts. The Nasdaq responded with a 2.8% surge because the worst-case scenario was finally taken off the table. Are you currently holding more tech or more energy stocks right now? If you think this tech rally is just getting started, comment the word growth below. If you think it's a fake out, comment trap. I want to see where the community is leaning. Part 2. The specific winners. The recovery we are seeing isn't just a rising tide lifting all boats, it is a surgical strike into semiconductors. If you look at the data following the announcement, Teradyne, TR, jumped nearly 8%, Entegris, ENTG, was up over 7%, and Applied Materials AMAT surged 6.5%. Why these names? Because these companies sit at the intersection of high-end technology and global logistics. The conflict was rewiring global supply chains, forcing expensive detours for specialized minerals required for chip fabrication. Semiconductors require absolute logistical precision. The ceasefire didn't just lower the price of oil, it stabilized the physical movement of goods through the world's most volatile shipping lanes. This supply chain relief is a massive tailwind for firms involved in chip manufacturing equipment and fintech infrastructure like Block Inc., which also saw a 5.8% jump as consumer confidence returned. Part 3. The AI factor. Perhaps the most modern aspect of this rally is the role of artificial intelligence. We are now in an era where AI-picked stocks are outperforming human intuition during crises. Trading algorithms scan diplomatic cables and sentiment in real time. When the ceasefire broke, these machines didn't wait for an analyst report. They recognized the news as a regime change for market volatility. We saw a massive rotation away from safe companies like McDonald's and into real growth stories like Amazon. The AI models aren't just looking at the peace deal, they are looking at the lack of fund obligations at the award stage for defense contracts and the sudden pivot toward reconstruction. This is algorithmic peace, where the machines have decided that the path to profit is through the resumption of global tech expansion. If you're finding this breakdown helpful, give this video a thumbs up. It really helps the algorithm get this info to more investors. Also, if you want my personal watch list of the top 3 AI-picked stocks mentioned in this report, comment the word list below and I'll make sure to get that information out to you. Part 4. The Skeptic's Corner. However, euphoria is often a trap. Major institutions like BNY and Franklin Templeton are calling this a relief rally, not an all clear. The primary reason for skepticism is the timeline. This is a 2-week ceasefire, not a permanent treaty. If the window closes without an extension, the market could give back every gain in hours. In fact, cracks were already appearing in the truce within 24 hours, causing futures to dip. There is also the defense plummet to consider. While tech is winning, defense contractors like Rheinmetall and Leonardo DRS saw losses of 5% to 9%. If your portfolio was hedged with defense, the peace deal actually hurt. Furthermore, underlying inflation remains high. Even without a war, the Fed still has a stubborn inflation problem that could cap the tech rally sooner than many expect. Part 5. The Strategy. How to play this. So, how do you navigate this peace pivot? Move past the emotional shock of the headlines. History shows that geopolitical events often cause knee-jerk reactions that normalize within 30 to 60 days. The chaos premium has been removed, returning us to a market driven by fundamentals rather than fear. The smart move right now is to watch the 10-year Treasury yield and the upcoming Q1 2026 earnings calls. We need to see if the CEOs of these major tech firms confirm that their supply chain pressures are actually easing. This ceasefire has given the tech sector a breathing window. Whether this rally becomes a long-term bull market or remains a dead cat bounce depends entirely on the next 14 days. The risk-on signal is flashing green, but keep one hand on the sell button. The market is resetting fast, and you don't want to be the last one to know where the smart money is moving next. To see my full breakdown on the specific stocks the AI is buying right now, check out the next video on the screen. I'll see you over there.